Okay, this is going to be weekly commentary 13. Now, the DXY, very nice. What do we have here? This is your monthly fair value gap that we've created. And you see that price is moving away from the highs as we expected. We want to see, you know, a move away from these highs. We want to punch straight through this buy side liquidity. Now, before we go there, let's go to the 3 month. Let's go very back. What was residing here? Sell stops. And what happened? So we traded beneath it, right? We've traded beneath sell side liquidity on a 3 month time frame. Each candle here represents 3 months of trading. Now, once we take this, right, we absorb these sellers. Where is the market going to deliver sellers? Buyers. This, right, is what I want to see price start to get magnetized towards. This fair value gap in this candle from this low to this high of the candle. And ultimately, I want to see it reach above this liquidity. This could take a very long time. It is a 3 month chart, but this is how I start to build a strong bias because you want to know where the very long time frame is going so that you can be in line for a very long time. If you're only looking at the daily, you have to change your bias very often. You're going to have to change your bias daily. And we don't want that. We want a bias for long term, and then we want to trade the days that are in line with a higher time frame. Basic, right? Now, if we go down to the monthly, we have the monthly fair value gap, right? So what can we see price reaching to towards the monthly level? There's this high fair value gap here, and this is a nice fair value gap that I want to see get traded to. Why? Because this, when this candle forms, this one right here, right? You see this price range that we're in? We're punching higher, and then we go lower, and you see when we break this low, this is the candle that moves quickly away from this low, and you see that it's still got a fair value gap and it's got a high, right? So I want to see price trade above it. And I said to someone in PM one time, they asked me where the DXY is going, and it's someone in the mentorship. Forgive me, I forgot who it was. And I said 110 is very, very likely for the DXY long term. And they said, what? 110? That is far. I said, I know, but this is a long term objective, right? Now, if we're looking for our weekly bias, which is what we're interested in, we have a fair value gap up until here from this candle's close to this candle's high. This is all buy side offered. Now, what have we done? Let's build some context into it. We have taken external liquidity from this high. Once we take external liquidity, it's very common, right? And it's very probable that we have a short-term retracement to collect more orders before funding another move. And what is this? This, right? These two lines, this area is the monthly fair value gap. Once you have the monthly fair value gap outlined, you don't remove it. Because what people will do, and this is a lesson in how you attack your higher time frame analysis, people will then go to the daily and they'll start refining it crazy. They'll start saying this fair value gap, this fair value gap, this fair value gap, and you got this fair value gap here. Stop. If you have, let's think of it logically. If you have a fair value gap here, fair value gap here, and you've got loads of fair value gaps so close together, then if you go out by a few time frames, doesn't all those fair value gaps become one large fair value gap? And isn't that what we've done with the monthly? Because now we know, right, by having this monthly fair value gap outline, we know that we can come to either of these fair value gaps. Specifically, I have my eye on this down close candle. This is an order block, right? This is the order block. This is fair value gap. This is the rejection block of this price range from this low to this high. Before we get there, we have this as well. This is also an order block. This is a down close candle and then a move away from it. We want to see how price comes and treats that. If and with the ranges, right? You want to always play around with the ranges. It's not a guessing game, right? Some people are going to say this is a guesswork. It's not a guesswork. If you consider this range, The order block is just beneath the equilibrium. So it's a discount. We want to see price trade towards it. I want to see price offer some sort of retracement before going higher again because we've been pretty expansionary for some time on the DXY. If you go on the weekly, let me just extend this out of time. If you go on the weekly, let me delete this, sorry. And you take this low to this high. This is the current range that we were trading in. It was a current range that we were trading in in this expansionary move. So this was the low and this was the high, right? This isn't a low because this candle's low is lower than that. And this candle's low is lower than this candle. This candle's low, however, is higher than this one. This candle's low is lower than this one and this one. So this is a low. This is not a confirmed high yet, right? We want to see where the next candle is going, right? We want to see the next candle open on Monday, and let's see if it's poised to go lower or not, because this is not a high yet. To have a high, we need the next candle after it. If the next candle's high is lower than this one, then we know that we're offering some sort of retracement. And this is where we start to look for where is the most logical retracement to go towards. We have this price range, right? And this is the 50% of the range. And what is the 50% of the range inside of? The monthly fair value gap. And it lines up with the weekly close. You see the equilibrium? How it lines up exactly with this close or this weekly fair value gap, this high, this low to this high. This is how you start framing higher time frame bias very strongly. Now, if we go to the daily, right, I want to see a retracement at least into this order block, and this is how I do it. If we trade into this order block early on into the week, so for example Monday and Tuesday, it's likely that we are placing in the low of the week early on in the week. And the low of the week, guys, right? You see all these low of the week and high of the week. They won't happen in random places. And chapter 2 will discuss this. In order to know, and this is going to be a gem, and take note of this, because this is going to be repeated in chapter 3. Let's say we are retracing, right, on Monday, and the week we expect it to go higher. When the week is expecting to go higher, we want to see where the possible low of the week is. Now, let's say Monday, we trade down lower. Yeah, we trade down lower into the Monday, and we're getting close to a higher time frame order block. Monday then is probably not the day that gave you the low of the day, the low of the week. Now, Tuesday London session might go and trade again lower and stab into the order block and reject. Frame the time of the week with where the higher time frame points of interest are. That is how you start to frame where the low and the higher the weeks get placed in within this market. They get placed in at price arrays. You need to then see the price array that matches with the likelihood of the low of the week and high of the week being placed in. Because we know if it's a bullish week, the low of the week gets placed in very early on, and vice versa. Because you always make the opposite end of the range fast so that you can use more time in the week to build the meat of that range. Like this one, what did we do? We traded lower, right? If we zoom into this candle, this is a daily candle. It's the same thing. If I cover this time frame, you would have no clue what time frame it is. It goes and makes the low, right? It makes the low, and then it goes and trades higher because it places in the low of the day very quickly so that it can spend more of the time of the day expanding into its objective. And it's the most logical approach you can have. What if the day was going to be bullish? Why would you go make the high of the day, then the low of the day, then the high of the day again? That would require crazy price swings, volatility, liquidity, and it's just not a logical approach to have within the marketplace. So my bias for this week that I'm going in right now, I want to see a retracement down as we've punched quite, gave the move into this buy side liquidity pool. I want to see a retracement back down before we go higher again. And the basis of that bias is we have cleared external liquidity. Once we have cleared external liquidity, we usually come back into the internal range before carrying on an expansionary move. And take note of that. Once you take external, we will retrace back into the internal range. So this is the internal range within here, the monthly fair value gap, etc. Accumulate more orders and then we'll head off into the direction again. My long-term bias, I want to see all of this get traded into. All of this get traded into. We've seen these lows get swept, right? You see here, we came down lower and we absorbed what? Sellers. We've taken sellers into the marketplace. Where would the algorithm deliver the sellers to? It's a market. Where do the sellers go to? It takes them to the buyers. Where are the buyers on the chart? Here. It's going to take time for us to get there. I'm confident that we will get there. Maybe a year from now, whatever it is. And from this, look at the consolidation that we've had here for quite some time. When we consolidate, especially on the higher time frame, and we move, the move is always a large move, right? This candle, you think this is big. The expansionary moves will have a large move. So that's for the DXY. And if we go onto the hourly, why I expect a retracement further is because on the Friday, we punched higher, right? And what do I teach you? What do I teach this as? You go higher and you go lower. You take a high and then you run the low. What is that? That's an hourly market structure shift. And if we go on a 4 hour chart, if we actually let's go back onto the 1 hour. If we consider this move higher, consolidation, manipulation, let's take out these sell stops, right? These lows are pretty equal here, and there's just a lot of buy side targets. There's this huge imbalance here to fill. With the context of the hourly market structure shift, we can start to see a few of these lows to get targeted here, here, and trade into this imbalance, right? This could be the weekly objective. Let's see how Monday trades. This candle's low already validated this low, and the market is already going down. This is an hourly chart. This could be going down for maybe a few days. We want to see. They have an order block here that we can trade to. We want to monitor it. If we look at the bonds, right, I had this buy side target that we just couldn't really get to. However, you see how we've taken out this weekly low and then we closed above this weekly low. We could have a week take out this buy side liquidity unless the bonds want to retrace as well, trading into this fair value gap. Overall, with the US, right, with dollar, I'm expecting a fair bit of retracement before looking to get long. I can be wrong. Monday is what either corrects my bias or it complements my bias. Now, I want to give you a lesson of the market maker sell model, a small one, nothing too in depth. So let's get out some nice colors. So what is the market maker star model? The market maker star model, there's a lot of mishaps. Now, what I'm going to tell you isn't ICT's definition. It's from my own study of the market maker star model, from all what I've collected from it and what I've learned from it and seeing it. I'm going to give you my own definition of the market maker star model. And I'm sure you haven't heard this definition elsewhere. The market maker star model is a move from a discount to premium market to then offer sell side delivery. So let me put that into context. We had this move here, right? From this low to this high, there was this big move, and we were tracing now, right? Here we are at a discount, right? You see this? This is the initial consolidation for this move up here. This is the discount, right? Look where we are now from this price range. We're back at here. This is a discount. The market maker star model is going to move back into a level of premium. Where is the level of premium? Preferably above the highs, because above highs is premium pricing. It's high price. If price is above a high, that's high price, right? So now the how does it move, right? So we've said that it is a movement from a discount to a premium market. How does it move there? Well, this is how the market maker sell model will move. The opposite is true for the market maker buy model. It will consolidate. It will expand higher and it will consolidate. Expand higher and consolidate. All of these, right? And it can have more levels, right? It's not always a one, two, three. It could be four, it could be five, right? It could even be two. The level of accumulations differ, right? Because it depends on the move from the discount to the premium. If it's a bigger move, it will have more levels of consolidation to get to the premium. Now, once you're above the high, right? Once you're in your premium market, this is where, and you see where you see this accumulation here and accumulation here. This is where you start to look at, like by here, you start to see, okay, this is a potential market maker sell model because we're accumulating, moving higher. Now, where do you expect this to happen? This right here, this is called a smart money reversal. On my chart, if you ever see it, I'll call it SMR, smart money reversal, right? This smart money reversal, using this logic now, and you lot should, because I've broken it down a lot, you lot should know where to expect these reactions. Where do you expect the reversals to happen? At some sort of premium. And this is actually a premium array, guys, because the last thing, right? I know you have the rejection block and whatnot, and you think the rejection block is the last one, but ultimately, what is a rejection block guarding? The old highs and the old lows. So these are premium arrays and discount arrays as well. So we take out this high, right? We take out this high and we start to move. Now, how do you trade the market maker sell model? You see how these boxes are in line together? This isn't by chance. When the market maker sell model, starts to distribute, because it always has a buy side to the curve to the sell side, because you have to buy in order to sell, correct? These accumulative phases, we expect price to go down, reaccumulate in the old accumulation areas and come down, retrace into the old accumulative areas, come down again. And your target for the entire market maker sell model is the initial consolidation to at the start of the buy side of the curve of the market maker sell model. This is the buy side of the curve. I'll just make it a bit easier for you guys to see with a trend line, right? So this is the buy side of the curve, and this is the sell side of the curve. The buy side of the curve with the accumulative phases, the sell side of the curve with the redistribution happening at the old accumulative phases. I have I can show you guys something as well that I want to share with you guys. Just give me 1 second. I need to go on the screenshots. So this was GBP USD, and what do we see here, right? We see this initial consolidation, and we see this, look, move higher, consolidate, move higher, consolidate, move higher, consolidate, move higher. What are we trading into? SIBI daily, and this is also an order block daily. So we have the fair value gap, right? SIBI is, a premium fair value gap. Order block as well. So where do we expect? You see this move, right? This move higher, this move higher. Where are we expecting it to trade into? The higher time frame price arrays. And we tag into the high time frame price array, and we see this happen, and we break this low significantly. You see this low? When we trade into the price array and we break the low, that is a change in state of price delivery, right? This move higher is now a new order block, and it's likely we're going to deliver lower prices. Now, look at these lines. No one on Twitter knew. Well, some people that are learning the market makes some model, no one would have known, and they would have called me lucky. How did I know these retracements are going to be here? Because let me show you the next one. Bear with me. How did I know the retracements will happen here? Because where are the accumulative phases on the buy side of the curve? That's all I done. I'm not a genius. I didn't lie. I didn't know this was going to play out like this. And the target was, of course, this large fair value gap on the daily. Ultimate target was, this initial consolidation. However, I wanted to see it just trade into here, and I was satisfied. But you see how this happens, and this happens on all time frames, by the way, right? I will have a whole lesson on market maker soul model and the many, you know, the many uses of the market maker sell model, because essentially the market maker sell model can just be used on an intraday level. It could market maker sell model into your high of the day and then sell off, right? It could be, on a weekly time frame. It could be market maker sell model on the Monday and the Tuesday to create the high of the week. You see how it's fractal, because it's to do with with premium and discount, right? It's just a movement from the discount to the premium, and then it's a distribution. Essentially, that's what the market maker sell model is. But going back to the DXY, you can see as well on the DXY, if I go to the daily spell, we have many characteristics of a market maker sell model, right? And you see how there's way more accumulative phases is because the premium from this discount that we were at, the premium, look at the distance of the premium. We need more accumulative phases to it. So a measure of the accumulative phases, you have to look at how far away is the premium. The more further away the premium is, the more likelihood you're gonna have more accumulative phases to get there. Logical approach. However, just to tie everything up before I end the video, I want to see us trade, give a retracement. The first thing I'm going to monitor is this order block. Ultimately, this fair value gap, if we offer a retracement soon, I want to see us retrace into this and then go higher, right? If we just move away higher, this is going to become a target for when the reversal occurs. For now, we just wait Monday, let Monday open, and we're going to monitor how Monday's trading, right? I don't, I'm not long-term bearish on DXY. There's no reason for me to be long-term bearish, right? Even when your buy side target is hit, that doesn't mean, okay, I'm bearish now. We're bearish when there is a market structure shift to the downside, or when there's clear rejection of price array, right? So we have this candle to trade into on the 3-month time frame. This fair value gap is staring at me in the face though. So hopefully this is of help. The market maker sell model, make a note of that. Try find examples. I can help you guys out. Now with the mentorship, I'm I really wanted to make this video with you guys. I have something called a dawat if you're Asian, if you know what that is. It's basically a big get together for the family, and it's at my house right now. I'm in my room making it, and they are downstairs. You won't understand how crazy that is unless you're Asian. Yeah. because I'm really sorry, guys. I didn't make it yesterday. I got caught up in some drama. Don't want to talk too much on it. Sort it out now. Um, I want to start chapter 3 this Tuesday, and I'm going to get the Word document done as we're going through chapter 3. Give me a week. I have an exam on Tuesday, but I still want to start the video for chapter 3 on Tuesday. So I hope this was useful. Key takeaways is the market maker sell model. And remember, once you have your higher time frame price array, don't go and refine it on all these lower time frames. Once you've traded into it, you can look into the lower time frame and do it. But for now, keep the higher time frame array here. Once you're trading into the higher time frame array, that's when you start to look deeper inside the price array and look for the specific micro retracements that could occur, right? Anyway, that's all for this video, and I'll catch you guys hopefully Tuesday, inshallah, and take care of yourselves, guys. And listen, stay out of drama. Whatever I do, you guys, I know you guys have my back, and I rate you guys. Don't involve yourself in my drama. These guys that I try to deal with, these scammers, let me deal with it, right? Because you guys don't need to drag yourself into anything. I don't, that's the last thing I want for you guys. Don't get dragged into my mess, yeah? So take care of yourselves, guys.